market structure shift and change in state delivery. You're not using them in the right way, and you're also overusing them in the market. You don't need market structure shift all the time, but you also cannot use change in state delivery every time. I'll show you what I mean by that. Make sure to like and share this video with your friends. A lot of gems and secrets I'm gonna go over this video that I decided to show based on my experience in the markets. Let's get into it. Now, first of all, because we're talking about market structure shift and change of state delivery, both of those terms I discussed in a lot of videos. So if you don't know what a market structure shift is and when it is valid, then make sure to watch my videos about market structure shift as well as change of state delivery. So I explained that sometimes you don't need market structure shift, but then people started overusing the change of state delivery and falling into losing streaks. It's not every time when I see a change of state delivery, it doesn't mean that it's valid. It doesn't mean that it's high probability. Now, briefly going over the difference between the two, difference between change of state delivery and a market structure shift. So taking a look at this, what do we see here is price was going up, coming lower, and now started going up. Now, let's say that we had a sweep here. So we already had a sweep, or let's say price sweep this low. Now, what is your market structure shift point? It's this one. Now, a lot of the time price will go here, then retrace lower, then go up. But a lot of people here also focusing on change of state delivery, and it's valid. But again, I'll explain when to use it and when not to use it, because I don't want you to actually fall into this losing streak and keep losing just because you're overusing the change of state delivery. It's powerful. It's really high probability only when you know when to use it. It's not that I'll be using this on any price action condition and then just look for this candle here and I'll enter based on it. Now, again, the difference between the two, a market structure shift would be breaking and closing above the last swing after the sweep. So a sweep here, that's the last swing. Now, a change in state delivery, on the other hand, it's going to be an early indication of a market structure shift. It's going to be the first step of that market structure shift. So you see, that's the last bearish candle, and let's say it's with liquidity. That's your last bearish candle on this dealing range from here to here. We then get a bullish candle closing above the previous bearish candle. What is this now? In the future, that's going to be simply just because we're closing above. This is your last bearish candle. It's an order block. Now, regardless of breaking structure, regardless of anything, but even if we look at this on the lower time frame, it's going to be a valid order block. But focus on here, that's also the first step of creating an order block. It's the change of state delivery. So closing above, it validates this as an order block, and price can come lower back to it, go up, maybe come lower, go up, and then the market shift is going to happen. So waiting for market shift, you're going to be missing all this move. But then change state delivery, when you enter, you're going to take advantage of this move and you're going to be part of it instead of waiting for it to happen. But then we're not going to be entering based on change state delivery on any time. I'll show you when to, and I'll show you when not to. This is a very important video. I believe a lot of people in the Discord, I see them looking for this specific pattern without context, and this just doesn't work. Price is going to go up. It's not going to break structure or do the market shift, and then it's going to come lower and take their stop loss. Now let's take a look at this chart. This is New Zealand dollar and US dollar. I'm going to be taking a look at the chart, explain what is happening based on this chart, and then at the end of the video, give you a quick summary about what we want to look at, okay? So starting from, let's say from this price action here, what do we see? If we were looking for, let's say we're looking at this area right here, so this fair value gap, can I look for a change of state delivery right here? The answer is yes. And why? Two reasons here. The first one, I'm going to leave it to later. The second one is also very important. We only look for change of state delivery when we have a very tight and refined area. So let's say I have a big fair value gap, just like this. A lot of the time, change of state delivery is not going to do the job. Price is going to come here, maybe give you a change of state delivery, and then you're going to enter here, and then it's going to go lower. So you get stopped out once, then it's going to go up. You got to change the state delivery. It's going to go lower, and it's going to keep happening until at some point start going higher. And this change of state delivery, that's the one that worked. How are you going to identify that area? You're going to refine your point of interest. You're going to look for some overlappings. You're going to look for some liquidity sweeps at that area. That's how you refine your entry and you refine your point of interest. This way, we're going to be ignoring all of those change state delivery, the fake ones, and only focus on this, because change state delivery happen every time, the same as the engulfing candle. It's nothing but an engulfing candle, right? Now, using engulfing candles everywhere, it doesn't work. We gotta look for those engulfing candles at specific areas. That's when it's really gonna work. Now, the same context here, this fair value gap. So we're gonna be looking, for example, for an overlapping where price break above, and then we have this point of interest. That's where we have a high, for example. So let's say we have this high overlapping with the point of interest. I'm gonna refine my big fair value gap to this. Now we have this high inside of the fair value gap, and that's where we can actually look for the change state delivery. There's also another way of looking at this is, let's say we have a big fair value gap, and then we have a level of liquidity to the left. So let's say we have this low or no equal lows, and then price started going higher. We still have this big fair value gap in the higher time frame. Now we can refine this to this fair value gap right here. Why? Because now we have this fair value gap that has equal lows. So when we have this sweep, we can then look for the change of state delivery. So the first reason of looking for the change of state delivery is that we need to have a very tight, refined point of interest. Change of state delivery is not going to work when we have a big fair value gap, a big point of interest. It's not really going to work, and you're going to be falling into that losing streak. So let's say we have this fair value gap on the higher time frame. So let's say this one, a big one, right? This one on the higher time frame, you see how many times we have change of state delivery, a lot of the times. But then regardless of this, either it's valid or no, but take a look at how many times price comes to and shows a reaction, then keeps going higher. So we only focus on tight and refined areas. Now let me show you this. We got change of state delivery here. It started going higher. We also have this fair value gap where we can refine it that it has this liquidity level. Now this is our fair value gap. When price comes here, I could go to 1 minute and look for a change of state delivery, and it's going to be valid. Now take a look at this. It also happened where we have this tight area where we have this mitigation block here, this old high inside of the fair value gap. That's an area where change of state delivery is going to work. And that's another one. We have this, also the same thing, fair value gap extreme one. This is going to work. It's refined area, and we're looking at this balanced price range, the small one here. On the other hand, so let's say we're looking at this high to be swept. What do we have here? It looks like we have a change of state delivery on the lower time frame. Now I'm gonna zoom in later to the lower time frame, but take a look at this. Change of state delivery, price started going higher. Now again, another high, because that's a liquidity level, right? Taken, then we look for a change of state delivery, and that's what people have been doing all the time on my Discord and on Twitter. Now take a look at this. That's another level, and those are equal highs. What happened? Taken here. Now price displaces above, then change of state delivery here. Even on the 15 minutes, not even on the 1 minute. Price started going lower. It was nothing but price coming to this overlapping high to go higher. So that was a liquidity run here. Now what is the difference between this high and those areas here, those lows? The only difference is that this is with the trend, this is against the trend. Simply a rule of thumb, and that's based on my experience, and no one is going to tell you this. No one is willing to actually share his experience of years and just simply give it to you for free. Not a lot of people are willing to do this. However, I am. So simply, those are highs that are against the trend. Those areas and those point of interest and lows are with the trend. Why? Because we only validate change of state delivery with the trend when there is already a market structure shift. Take a look at this. What happened here is price coming lower, going up. If you would consider, for example, this as a market structure shift, I want price goes lower, goes up, was failing to close. Let me zoom in here. It failed to close above. Then what happened? It took this low. There you go. That's the low taken. And then what happened? It closes above the high. So that for me is a market structure shift. When I have that market structure shift, because I'm really willing to wait for the market structure shift in order to look for the change of state delivery after it, right? So now my trend is bullish. Now I'm looking for some sweeps of lows in order to go higher. You see, market structure shift here going up. Now looking at those lows, this is where I'll be looking for change of state delivery. At this low, also if this low was swept later, I'll be looking for a change of state delivery to enter from. There was a low here. That's where we look for change of state delivery. You are overusing market structure shift if you were looking for it here. You don't need to. Let's say prices simply going higher, going higher. Then prices come in here and then willing to go higher, because now what do we have? This move of internal to external, going to this high. Imagine that you're actually looking for another market structure shift here. That's just overusing the market structure. You don't need, you only need to look for a change of state delivery here. Why? Because you're simply with the trend. Now let's say price taking this high. You cannot take change of state delivery here. You gotta wait for a market structure. Why? Because you're against the trend now. That's the rule that we're following here. That's the thing that not a lot of people are gonna tell you, and that's the thing that a lot of people will just tell you to keep using it in order to keep losing. So you see, taking this high, for example, let's say taking this high, you gotta look for a market structure shift in order to have that big trade. You cannot use change of state delivery. You could get lucky sometimes. Depends on the situation. If price was willing to reverse from that level, but you gotta wait against the trend. You gotta wait for a market to shift. And you see price kept going higher. Change of state delivery here. Change of state delivery here. Even here, if you consider this as a market such a shift, for example, this would be a valid one. Now let's go to 1 minute and see what is happening on the low time frame for a change of state delivery entry, and what is happening on the opposite side. So let's say even this high, when taken, if there was a change of state delivery here, at all those highs, because simply we're breaking above those highs, they're against the trend, right? So even this high right here, they're against the trend, and the change of state delivery entry is nothing but a trap at those points. Now let's take a look at the 1 minute, and this is a chart that I've never seen on the 1 minute. I was just checking the charts. I saw a very nice case study here in order to show what is happening, and now I'm going to the 1 minute for the first time. So let's see. This is a low of Asian after main market shift here. That's where we could look for a change of state delivery. You see price came here, equal lows, started going lower with a change of state delivery. That's already a big one. You could have entered here or wait for 50% of this, or you could have taken the one that happened on the Lender kill zone. So this is price come into this rejection block, reacting. We got a change of state delivery at this candle. That's where you could have entered. You don't need to wait for a market such a shift and then wait for price to retrace. You don't, because that's with the trend. You could enter from here and targeting any 15-minute level or 1 minute level, whatever. Here we have this fair value gap with this low, price taking that low, which is this one, and then given what? Bearish candle, bullish, creating this order block here. That's the start of the order block. We could have simply entered from here. If you waited for a market such a shift, where it's gonna be? All the way here. And simply price is now willing to retrace all the way back here. Entry based on change of state delivery is valid here, and then target whatever you want. Now again, we have this fair value gap with this low. And again, let's see what happened. Price started coming lower. There is no change of state delivery here. Now because price broke below it, we could look for another liquidity level, right? So price simply went lower. Now we want to have another refined entry, and we have what? Those lows here on the 1 minute time frame. So you could have taken those lows and then look for a change of state delivery at them. You see, price sweep this low, change of state delivery at this point. That's how you get those sniper entries. And there is more into it that I'm going to be publishing on the next videos. But again, you could have targeted whatever you want. Now we have this point of interest again. Take a look at this. Price came back to it. We have this, even if we want to refine it more, what do we have? This high inside of the fair value gap, this high inside of fair value gap, overlapping. Could have go to the right and see that, okay, bearish candle, bearish, bullish, but it's inside. We did not close above this. And then we have this big one. Now, when I have those big candles, I always go 50% retracement, stop loss below, and then again, target whatever you want, right? Whatever makes sense to you. Now, again, the same thing here. We can see sweeping the low, change of state delivery, entering here. And that doesn't mean that you're going to win every time. So in this case, if you just put it below the low, you might be stopped out and you could have entered again here, right? So that's another entry, unless you put your stop loss a little bit below, right? You give some room for price to breathe, even though this one went to the overlapping high, but then price decided to go lower in order to go higher after. So you see, now take a look at those. Price taking this level, there was no change of state delivery. Taking this level, there is a change of state delivery. You're going to be entering here, and then you're going to put it above the high, targeting whatever. This is not even one-to-one, and then you lose the trade. Now, another time, we see that we're going up. We came to this other liquidity level, and what do we have? Change of state delivery here. Again, you entered here with a stop loss above the high, and then you target whatever. This one is 2.7, so this time it worked, just because a lot of the time when you're trading external to internal, you don't need bias every time. Sometimes you get lucky. Even if you're against the bias, you get lucky because price need to retrace into internal. Now, again, this time we got the change of state delivery at this one. You only have this, but you actually missed the real move. So even if you get some profits here, but you're missing this real move all the way from here to here. Those are some pennies, right? Compared to those thousands. From this video, that's how I want you to approach the market. That's the difference between change of state delivery and market size shift. No one is going to teach you this on this way. No one. I guarantee you. Why? Because a lot of people keeping this to themselves. So you see fair value gaps with a trend, change of state delivery. A high or a fair value gap against a trend, we need a market size shift. So now putting things together, basically, as we're going higher, and let's say the trend is to the upside and we create a low and then we go up. Now let's discuss this. This is a breaker structure simply, or you can consider it a market structure shift. Depends on whatever was happening before. But let's say now we're bullish, right? A breaker structure, market structure shift to the upside. We create this low. Since we are bullish, we don't need a market structure shift at this point. When this is a low taken, and it should be a refined one, a high probability point of interest here, right? So when this one is taken, we could look for a change of state delivery here. Now price keep going higher. At those points, we don't look for a change of state delivery. We only look for a market structure shift. And why? Because we're simply bullish. There is a market structure shift that happened here, and we're pushing higher. Now again, this high taken here, we're not looking for a change of state delivery entry. We look for a market structure shift, and that's what happened here. There's one market structure shift here, and we have price going higher, coming lower. Now, because we're having this market structure shift here, this high when taken, that's a valid change of state delivery entry. It's no more a market structure shift needed here because we just switched bearish. Now, all of the highs in the bearish scenario, all of the highs we can enter using change of state delivery. And again, not any high, but it should be high that is a high probability one, and it's refined and tight, because change of state delivery only work when we have what? A refined and a tight area. So now price goes lower. At this low, we don't look for a change of state delivery because that's against the trend. However, at this high, that's when we look for the change of state delivery. And this low, no change of state delivery. And then let's say price continue going lower. So let's say price goes like this. Then we have a market structure shift here. Then we create a low, or price simply go to, let's say, an overlapping, right? So this was an overlapping low in a fair value gap. That's when we can actually look for a change of state delivery at this point now. It's not going to be a market structure shift because it already happened. A mistake that you've been doing is that you're overusing the market structure shift and you're missing trades. Oh, you're going like this. You have the market structure shift here. Then you have another fair value gap here, and you also wait for another market structure shift here. And the cycle repeats, right? And then you keep missing trades here. Price doesn't go and doesn't retrace into your fair value gap after market structure shift every time. I really hope this video was helpful. This is a video that I just made because I see a lot of people losing because of this. A lot of people keep losing because of this. And I said, okay, I gotta make a video, share my experience, share something that no one ever talked about. If you guys like this video, then make sure to hit the like button and also share this video with your friends and leave a comment with whatever video you want me to talk about in the future. I really did my best in order to make this as easy as possible and as beneficial as possible. This is Mulham, and I'll see you in the next video. Bye bye.